The Bulls are back in charge. The Aussie share market has hit a brand new record, all-time high for the second straight day, and the US market has gained fresh legs to push on up. Here's everything you need to know about key US earnings and what stocks you need to watch down under. Welcome to the Daily. My name's Jessica Amir, a market strategist here with Mumu. Well, we saw US stocks wildly move higher overnight, but why did they push up? Well, it was for several key reasons. Firstly, the US Pentagon is now restricting US companies from doing business with that Chinese startup that we heard about earlier in the week called DeepSeek, and that caused markets to get a little bit nervy, but those fears have now been quashed. Plus, we heard from a lot of companies reporting better than expected earnings. We'll get to that in a sec, but we also saw 85% of the S&P 500 companies rise overnight. That's wonderful news, and that's why markets are turning higher. It's for good reason. Consumer spending data came out showing the economy is in good shape. And heavyweights are continuing to report better than expected earnings. We saw the tech titans, Apple, Meta, Tesla, and Microsoft all mostly report rosy, upbeat outlooks. Plus, also consider that we're at the end of the month, so buying is picking up. Plus, options are growing, suggesting traders see the NASDAQ 100, which is what we've put in front of you, an ETF that tracks that, the QQQ, suggesting that this will head to higher levels ahead. So that is something for you to consider if you don't have a position in the NASDAQ 100. So why is the NASDAQ 100 also expected to move higher? Not only because earnings outlooks have been positive, but earnings numbers are far better than expected. So big tech stocks have so far reported now 26% earnings growth, and the market sees that continuing ahead, which is great for supporting the share market. So earnings growth is expected of 17% ahead, and this is a pretty bullish scenario for stocks. But moving to US earnings results that came out overnight, suggesting all roses could turn up and push a market to greener pastures. We heard from IBM shares overnight. They were perhaps one of the standouts, a showstopper in terms of share price performance. Their shares, as we can see, they rose 13%, and that pushed their shares to a brand new record all-time high, as we can see on the screen, $258.27. Thanks very much. Why? Well, exceptionally strong sales. An exceptionally strong sales outlook as well. Plus, AI bookings are growing far quicker than expected. That's really positive for a company that's completely turned itself around. AI bookings grew 67% quarter on quarter to $5 billion. Just exceptional stuff. It's not only proving right now that IBM is deeply penetrating the AI market, but demand is insatiable and it's continuing to gain market share in the software business. So this is really important. Plus, we also heard from Apple overnight. After market hours, though, so that's why we saw after market, as we can see on the screen, their shares are up 3% in post-market trade. So people like what they see and they like what they're reading. Now, I'll tell you what they like. Of course, the key services division, that is where the hot sauce is for Apple. It's not about selling devices. That's not where they make their profit margins. So what's happening is they basically prove that their key services division, again, services, that is growing now quicker than expected, which is great. That's great for driving future earnings growth. And that's, of course, a key for perhaps suggesting this company can finally turn around. You might be expecting some earnings upgrades, but all in all, keep an eye on Apple, as we said, and as we can see, they're up 3% in after hours. As for other mega tech stocks, just to be across in other standout moves, we covered Tesla yesterday, but it's worthwhile noting Tesla shares are up 3%. Of course, their report card shows their biggest earnings drivers got real green lights to support high earnings ahead, and of course that means vis-a-vis share price growth. But basically, in case you missed it, their cheapest EV is on track to be released early this year. It'll be a game changer, attracting a flood of new buyers and fresh EV converts, perhaps like you and me, to buy an EV, given that their new EVs are expected to be around $25,000 $100,000. Meta was also a standout overnight. Their shares rose 2%. And that's, again, just to put it differently, as we said it yesterday, Meta is now saying that they will be leading the software AI market in terms of social media, and that's thanks to their large language model. They've got 1 billion users that they're expected to see this year. Obviously, that means more user growth. That means they'll be able to attract more ad revenue. That is something for you to consider if you are looking for stocks to watch this year. Microsoft shares going the other way, though. Their shares are down 6%, but it's really important to note that I don't think this pullback is going to last. Why am I saying this? Well, the reason that their shares are falling is because their key growth division, Azure Cloud Sales, that actually is experiencing growth pains. It's experiencing record high demand, and it can't keep up with that. How? Well, it's struggling to build enough data centers so that they can sell more sales. So that's the key here. Microsoft AI intelligence business is growing at 13 billion annualized. That's exceptional. That's a record. Plus, it's got $300 billion of commercial services contracts in its pipeline, and that's a 67% jump, and that's exceeded expectations. Again, I'm just giving you this as something to consider. That's why I think Microsoft's pullback won't last. But let's move to the Aussie share market, which, as we said, and as we expected and have been saying this for some time, expect the Aussie share market to keep hitting new record highs this year. That's obviously for good reason. Last week, we mentioned that inflation was expected to come down, and we saw that in terms of the data. Now, why is the Aussie share market expected to break higher ground? Well, banks, miners, tech, real estate, and industrials, they're all the key interest rate sensitive sectors. They're gaining a new lease on life. And that's because we're probably going to see the Reserve Bank of Australia cut interest rates next week. That is, if you go by the futures that are suggesting there's a 92% chance of that. So here's something to watch. Keep an eye on this ETF. You probably know about it. It's the Aussie Share Market ETF by Vanguard, VAS, the biggest ETF in Australia, in fact, that tracks the Aussie share market. Let's move to ResMed. ResMed just reported results, a record turnaround, and their shares are trading around record all-time high territory. So why the big turnaround in their shares? Well, you may remember there was a lot of concern about weight loss drugs reducing demand for their sleep apnea devices. But today, the data proved that, they're not really seeing a slowdown in sleep apnea device sales. In fact, they're now growing at record rates. In fact, the CEO came out today and told analysts in a call that the devices that they're selling are actually now increasingly being used by health-conscious people who've taken the weight loss drugs and they want to monitor their health conditions. So ResMed shares, they're already up 36% in 1 year, but you might be expecting earnings upgrades to come. And as I've been saying, earnings upgrades, of course, drive share price growth. And that's another reason for you to consider watching ResMed shares. That's the daily. Bye for now.